Hello and welcome back. Thanks for tuning in this week. So I'm going to get to statistics from right across the country today, most places, not all of them. I'm also going to read some YouTube comments from last week's video, some of my favorite comments. I'm going to talk briefly about this home buying recipe. Nothing's really changed yet, but we are making some progress on one or a couple of those items. But first, we have a message from China. Yeah, so check out this video. This is pretty crazy. One of you followers sent this to me. You know who you are if you're watching. So yeah, let's check it out.
At the start of the year, a user from China shared on X a list of the 5 cities in China with the biggest drops in housing prices. I never expected that Feng would fall this badly, and it still can't even make the list. Let's see which 5 places have the biggest drops. In 5th place is Chuping City in Nanjing. Property prices have dropped from over 17,000 yuan per square meter at their peak to just over 6,000 now.
So 17,000 Chinese yuan is about 3,300 to 3,400 Canadian, and 6,000 is about 1,200 Canadian, just to kind of reference what that is. And they're talking square meters, not per square foot here.
A drop of more than 10,000, over 30%. In 4th place, there's Lin'an in Xiamen. Prices went from over 30,000 at the peak to 13,000, a drop of over 17,000, more than 60%. Third is Rushan, Yintan, and Weihai. Property prices went from over 8,000 at the peak, which doesn't sound high, but now it's dropped to 1,000, a drop of over 7,000, more than 80%. Second is Yongqing in Hebei. Prices peaked at 23,000 and have now dropped to 3,500, nearly a 20,000 drop, an 85% decrease. And the first place goes to Yangzhou in Hebei. Prices peaked at 45,000 and have now fallen to 6,000, nearly a 40,000 drop, with a 90% decline. Think about those who bought these properties.
That's crazy, a 90% decline. People talk about this in my comments sometimes, and it's like, yeah, I could never imagine that. But these places have seen this in some places in China. These, are, of course, aren't the big epicenters, but these are cities in China, and people have bought into them. I'm guessing these are more like suburban areas like I live in, but there are more apartments and condos there as opposed to detached and townhouses and stuff. But that's a huge drop. So they went from 30% in some places to 90%. Now he's going to talk about this a little bit more and just a couple of quick stories, but watch this video. I'll leave the link in the description and you can watch the whole thing, and it gets into how people were tricked into buying these places and the Taiwan and the China, and there's all sorts of stuff in there. It's a pretty interesting video. It's 17 minutes long, but the link is in the description. But let's just watch another minute or two of this.
How are they going to make it through this year? In the past year or so, many 3rd and 4th tier cities in China have seen their real estate markets crash. Property prices have dropped to rock bottom levels, and some remote city neighborhoods have even turned into ghost towns. Among the 2nd tier cities, Xiamen in Fujian, once seen as a dream coastal city, now faces a situation that is even more shocking than expected.
In Xiamen, many families are really struggling right now. They live in multi-million yuan mansions, but can't even afford a few hundred yuan for property fees. They drive luxury cars worth over $1 million, but can't even afford a few hundred yuan for gas.
Not long ago, property prices here were sky high, attracting investors and homebuyers from across the country. However, with China's economic downturn, the housing market is on the brink of collapse. Middle-class homeowners in Xiamen are facing struggles they've never experienced before. Heavy mortgages are suffocating them, and now Xiamen has become a nightmare for many middle-class families.
Yesterday, one of my clients called me and said his mortgage and credit card payments were overdue. He used to spend money freely and never saved anything. On top of that, his income has been unstable the past few years. He's been getting by robbing Peter to pay Paul, and now even basic living expenses have become a problem.
One homeowner in Xiamen, Mr. Liu, saw his property value drop from 3 million to 1.6 million. He's exhausted from trying to keep up with a mortgage and can't continue to afford it. His property was listed for judicial auction, and now he regrets ever buying a house in Xiamen.
So I've already heard stories like this, like just people that regret buying homes at the peak and whatnot. But that guy's house went from, or condo, whatever it was, went from 3 million, which is about 600,000 Canadian dollars. And of course, we see lots of those $600,000 condos in Canada, right? But they went from 600,000, 3 million yuan to 1.6 million, which is about 320,000. So that's almost a 50% drop. And this is in a second tier, middle class, family kind of city. So I guess China's peak was in 2019. I'm not an expert on that market over there, obviously, but if there's any Chinese people or people that know that market, let me know in the comments if that was correct, if it was 2019. It seems like they are a few years ahead of us in China, so if that's a glimpse of what's to come here, things aren't going to look too bright for the real estate market, which is not unexpected considering the bubble we just went through. Okay, now let's move on to the stats from across the country. I don't have the East Coast. They hadn't reported them yet. So New Brunswick, Nova Scotia, Newfoundland, they weren't included, and some other places, but I have most of the big places in here, so let's check them out. Starting with the month-over-month price change from December to January this year. This is the average MLS price, and you can see here Chilliwack District had the biggest decline, 12.8% they dropped. Peterborough, 8.8%. York, down 6.5%. You can read down the list there. And we've had more declines month over month than we have appreciations or increases. And that's because this is winter. This is expected January. This is what happens. You see there at the bottom there, Kingston and area had an increase of 4.7% month over month. Peel region up 2.4%. London area up 2.4%. Guelph up 1.9%. Ottawa up 1.5%, and Halton, Calgary, province of Quebec, Edmonton, really not much change there. But yeah, you can, of course, check those out, pause the video, whatever you need to there. But this is new for this week. I'm going to do the year-over-year price changes from January 2024 to January this year. So you guys know I'm not just cherry-picking data here. Of course, most places have seen year-over-year increases there. Starting from the bottom, province of Quebec, 12.5% year-over-year increases. Now, that's considered a very good market. We are by no means in a housing crash or anything like that in Quebec right now. It could be considered a housing bubble just like the rest of Canada, but things are definitely not crashing there. London area, London saw a 10% increase year over year. Again, every month differs, but for January they're seeing a 10% increase. Edmonton up almost 10%, Saskatchewan up 9%, Montreal almost 9% also. Windsor, Essex 7.1, Calgary 6.3, Barrie, Simcoe up 6.1, Victoria up 5.1. So yeah, a bunch of places there. You can read through them there. Toronto's up 4.5% year over year. And then on the declines, a couple of smaller places at the top. Northumberland Hills down 9.6%, Peterborough down 5.7%, Hamilton down 4.8% year over year. Greater Vancouver down 3.4%. Maybe the weather's not too good out there in the winter this year. Chilliwack District down 3.3%. Yeah, Waterloo down 2.6%. York down 2.1%. And anyway, you can read through them there. That's for the year-over-year price changes. Moving on to the dollar amount of change from the peak. And we have some really big numbers here. I sound like a broken record. I think they say this every month. So Halton region is leading the way there, down 381%. Now they do have high-priced homes there, but almost 400 grand they've dropped from the peak. That's huge. York region down 361,000. Again, pricey homes right near in the GTA there. Durham region, again, part of the GTA, down 328,000. Peel region, all these big GTA areas are down huge, and there's a reason for that. We'll get into that in a second. Down 310,000. Peterborough down 284,000. That's not a GTA even, but close enough. Down 284,000. Northumberland Hills down 275,000. Waterloo region down 274. A lot of students in Waterloo. I think they've had problems with the students leaving there lately, so it could be something to do with that. Hamilton down 265. Guelph down 264. Niagara region down 258,000. That's big for our region, for our house prices. Toronto down 255,000. Fraser Valley down 247. Chilliwack down 208. Barrie and Simcoe 198. London area down 169. Kingston area down 150,000 almost. Windsor, Essex down 147. Greater Vancouver 138. Not much for there, of course, with those house prices out there. Then you get to Victoria down 132, Ottawa down 117, Saskatchewan down 21 grand, Calgary down 18, 12,000 in Montreal. Edmonton down just 3,000, and province of Quebec down just $2,000. Not much, pretty much even there. Looking at the same data, but as percentages there, we can see Peterborough over 32%. I don't know if that's a record, but that's pretty high for losses. That's a pretty big loss there. Northumberland Hills down 30%. Niagara region, where I'm down. Yeah, we're down here for sure. 28% we're down. So tons of places here that are up at the top. Durham region down 26.6. Waterloo down over 26%. Hamilton almost 26%. Halton region 25%. Guelph down 23.6, York 23, Peel 23, Chilliwack 23%, Windsor Essex down 20%, and then a bunch of them down 20% there. Toronto, London, Kingston, Fraser Valley all down 20%. And then you get into the teens there, Barrie, Ottawa, Victoria, Greater Vancouver, 10%, which isn't a lot. Not really a correction there, a minor correction that would be considered, but I think the worst is still yet to come out there for sure. Saskatchewan, 6.3, Calgary, 2.9, Montreal, 1.9, 0.7%, province of Quebec, again, not much of a change there, 0.4%. Now let's look at the market balance here. This is the sales to new listings ratio. Now this is what was alarming. I just released, I'm going to get into it also in a second, the GTA market data. And I'm going to show it, like I said, in just a second. But this is all the areas across Canada. And look, the majority of places are in a buyer's market in January, which will say, okay, it's January, not a big deal, right? It's slow. Not a lot of people buying, so it kind of makes sense. And you can see them all there lined up. The only one place that's in a seller's market was Edmonton. Now, again, I don't have the East Coast data in here, so maybe they are too. But balanced market, Saskatchewan barely. It's almost in a seller's market there. Calgary, Ottawa, province of Quebec, Montreal, Kingston and area, and Hamilton are all in balanced markets. And then you got all these places, a lot of big places in there too, like Toronto, Greater Vancouver, York, Fraser Valley. There's huge places in there that are in these buyers markets. And look at Fraser Valley, 24% sales. That's like the lowest. I think the lowest I had before was 28 or something. But and there's a lot by the 30%. These aren't just like barely into buyers territory. These are deep into buyers territory. So now what I wanted to do to kind of put this into perspective is let's compare it to last year because, it's January. Of course, it's going to be slow, right? But there's a lot of new listings out there, and this is the problem. It's not that the sales have dropped off significantly. The sales might be a little bit lower in some or in most areas. Some areas might be a little bit higher, but I think generally they're a little bit lower, the sales. But the inventory, the new listings has really increased, which is putting these ratios way down. So here now, let's look at compared to last year. Yeah, so we have the same there in the same colors as this year for 2025, and the light blue there behind. And you see almost every place that's in the buyer's market in the gold there was a lot higher. Some of them were significantly higher, almost approaching seller's territory. Well, the one was there in Durham region. It was in seller's territory in January. But look at all the areas there. Guelph was almost in seller's territory. Chilliwack District, Halton region, Peel region. So all these places were almost in that territory, and this year they're not. They're like significantly lower. So when you're looking at the difference between year over year, it's a clear trend that things have changed in a lot of places, and there's inventory coming online in all these places right now. And you're seeing it. You could see it, listening to the people on X and whatnot. You hear a lot of people talking about all these new listings, and in the big cities too, in the GTA and Greater Vancouver. So it's not like those places are being starved of inventory. They're coming online there too. So yeah, we're obviously going to keep an eye on this. We'll see how February plays out. We probably will see price increases, but it'll be interesting to see what this inventory levels and how it plays out. So here is this chart I released on X earlier this week, but this is the mortgage arrears. Now, you heard me talk about the home buying recipe, right, at the beginning, and nothing's really changed. Unemployment actually went down to 6.6%. It goes up and down, but generally it's been trending up. But of course, we do see that pullback, and it's not unexpected to see some months where it actually drops, but not enough to change the battery bars on the recipe yet. But here is this chart here. This is the number of mortgage mortgage arrears. Now, I do the percent and the numbers sometimes, but I want to look at the numbers because we have to look in context here. And I noticed looking at this chart here, right now we're at 10,480 total mortgage arrears, and this is only with the 10 banks across Canada, mind you. This is not with all the private lenders and the B lenders and the credit unions and the Caisse Populaires and whatever else, right? So this is only the big lenders, and I put a line there, that gray line, good times and bad times, right? So the bad times, of course, is when the mortgage arrears go up, and it makes sense, right? Let me just move my head here. So yeah, when you look at the big peak there in the middle, 2008 after, of course, that was high unemployment, tough economic times. It was bad times then. And even back 2000, right after and right before, we had the dot-com bubble. Lots, unemployment went up. During the 90s, before that, right at the beginning of this chart, the red thing, you'll see it, unemployment was up. The 90s was a pretty slow decade there. It was almost like the lost decade in Canada, a recession, whatever. So, it wasn't considered good times in the 90s. Things were flat. The economy wasn't moving. So and this is a general kind of timeline or trend line here to say, generally above that are bad times when unemployment gets above that, and below it have been good times. Like look at the run up in the middle there towards the 2008 financial crisis. We had good times. If you remember, the economy was booming, houses were selling. And of course, after COVID, all the stimulus, it was because of the stimulus, not because Canada and the economy was the greatest in the world. It was just the stimulus and the inflation. So of course, it was good times if you had property and things like that and assets. But now look, when it hits 11,000 approximately, things really take off. And you can see I have two of those orange arrows there, and they shoot right up. And it seems to be around that 11,000 when it really starts to take off. So anyway, we're going to keep an eye on this. We do expect mortgage arrears to take off. And again, this is just from November, this data. So we had today's data, which of course isn't available. You need 60 days for the mortgage arrears data. But if you had it, I'm guessing it's going to be higher than it is now. Okay, now this chart was pretty interesting. I put this out on X this week, and I was just looking at data, and I was like, wow, this is crazy. So this is the sales to new listings ratio for January. All the Januaries back 10 years, or however long the data would give me on the system. And this is right from the Toronto Real Estate Board, the data source. So look at this year, 30%. This is the worst January for the sales to new listings ratio, meaning it's deepest into the buyer's market this January, deeper than any other January that we have on record here. And the closest was 41%, and that was in 2023, not a great year. 50%. January fluctuates generally, but look at 2017 there in the green, 72%. Clearly a seller's market. Of course, I've marked it there up in the top seller's market. And look at 2021, clearly a seller's market. And we know what happened in those years. 2021, January came, and 2021 was a bull year, right? There was tons of homes selling. Prices were insane. Days on market was really low. Same at 2022, the beginning of it. January came. It was huge, and we had the biggest peak. And, of course, it popped after that. But we had this big peak. And, of course, if you remember 2017 in the GTA, 2017 was a stellar year for sales. Prices jumped. If you look at the actual charts, whether it's the Canadian chart or the GTA chart, 2017 shows a big peak also. So you see it kind of sets the tone is what I'm saying for the year. When you see these Januaries, and when it's at 40, 50%, it's kind of hard to see, and it's not going to be a stellar year or a record year, but it could go either way, and then maybe some small price declines and 5% year over year, whatever the case is. But this year, 30%, it's not setting a good tone for this. And of course, we see those increased inventories, and we've been saying it, inventory is increasing, and the supply and demand, right? And it's everyone kind of thinks that you have to build the homes. You don't need to build the homes. The homes can come from resale or from investors or from condo developers that can't sell them. Supply comes from all sources. So yeah, let's just look at the next chart here real quick here. So this is the average MLS sale price, and I've highlighted the green ones. This is just this is yearly data, this one, but it goes to show you when those January numbers come out, they're a precursor to the year to see how it plays out. And you can see on the prices, look at 2017, we had increased prices, 2021, increased prices, 2022. And yeah, you can clearly see that they are correlated. I'll go back there. Of course, I did paint them green just to make it easier. But when you're seeing those big jumps, prices usually go up. And when you're seeing, we've never seen a buyer's market in January. So what's going to happen? Well, we're going to find out what's going to happen. Okay, lastly, I just want to read some comments from the latest video. I appreciate all the comments as always. I read through them all. I don't reply to them all the time, but I try to reply to as many as I can. It would be like a full-time job doing it. But here's a few from the last video that really caught my attention. So let's read through them and I can maybe comment on them too. But again, leave your comment below because I do love reading them. So here, this is from whoever it is, AM2 something. By all measurable financial standards, things are worse than they were in the early mid-1920s. So it's perfectly reasonable to anticipate this crash will be bigger than the one in 1929. I think it's going to crash so hard it leads to a totally new system of doing things. And whether I agree with that or not, or whether you do, you can certainly agree that it feels like our money is becoming less and less worthless, or more and more worthless, I should say. And like something's got to give, something's changing, right? I would say that could be accurate, that statement. From Alex Marshall here, it's scary how similar Canada and Australia's housing markets are. And it's true. They are very similar. I've done content on Australia's market when I'm comparing different countries. And Australia is in like a big bubble, just like Canada. And they are very similar. It's pretty crazy. And I'm guessing they have high inflation there also. This one from Angel Rodriguez. This is pretty interesting, actually. I was living in Spain in 2007. We got one of the worst, if not the worst, real estate bubbles. People back then were also trying to justify the real estate mania with exactly the same arguments that we hear in Canada. For some reason, people always think that this time will be different. Spoiler, it won't. And you hear it all the time. This time is going to be different. One of my favorite arguments back then and now is that investors and banks would stop a price crash by keeping the listing inventory artificially low. As everyone knows, that didn't work out well in Spain. So yeah, and the banks and the investors, well, the investors can't really do that, but the banks can by extending mortgages and doing all these things. But yeah, it can only work for so long. It just prolongs the inevitable, and that's what we're seeing now. This is what we've been seeing for the last couple of years. But yeah, this is why my forecast is based on this data and the historical trends, and they have always tried these tricks, whether it's in 2007, 2008, or 1990s. And that's what they do, right? Nobody wants a crash, but the cycle always plays out, and it's just a matter of when. From Great Chala, 1960s, you only needed one income earner working to purchase a house. If your spouse participated in working, it was taxed at a very low rate as it was considered part-time employment. Fast forward, 2025, it matters not how many people work, their combined income and wages barely make the home purchases affordable, let alone think you have an option to stay in your home to raise children. Yeah, so it's very true. Like, I've said this too, like you used to have, like in the 50s, one income earner and, a car and a house, go on vacation, and it's progressively got worse. Even in the 90s, you'd have maybe two income earners, but you still have a house and two cars and go on vacation and some savings too. Now you have two income earners, you don't have a house, you can't even barely afford to go on vacation, and groceries are insanely expensive. So it's gotten a lot worse. And of course, it's all to do with the devaluation of the money and whatever else. But yeah, good point there. Great Chala. From Sid Singh, we have lots and lots of land, including small towns. If the government was willing, they would build new cities with affordable housing. Why isn't this happening? Excellent point. Yeah, why isn't it happening? Bureaucracy, red tape, inefficiencies. There's many reasons. It's their priorities are obviously elsewhere, not on housing. It's on other countries. They're flying across to other countries and giving money. And look what's going on in the States with the Doge, and the same thing here with whatever it's called in Canada. They've seen all this money be wasted and funding wars and things. But no, they need to focus on Canadians and building homes for Canadians. And I agree. Whether it's building homes or developing the land, let us build our own homes. We will gladly build our own homes. Just give us some land to do it on. I've said that. Give me a parcel of land. I'll even pay for it. But not at these astronomical prices, like $400,000 in Niagara for a lot. No thanks. Like, I should be able to build a house for $400,000. From John 577. Okay, I swear it's not me here. Today, my biggest client emailed me to let me know that corporate in the U.S. has put a hold on all shipments from their Canadian facility. The tariff war is the worst thing possible. And yeah, that tariff war isn't over. But again, this is just a representation of what's happening in the economy. Like, things need to be reined in, and there's going to be some collateral damage, whether it's, and we can blame the states or blame whoever you want. But at the end of the day, it's our own inefficiencies and wasteful spending. And now the chickens are coming home to roost, and we're going to have to pay the price and clean up our act. From 0 to 91, Ron Butler has spoken about this. Essentially, builders were not building condos for people to live, but rather for people to invest. Once the investment stopped working out and investors stopped buying these units, regular everyday Canadian looking for homes to live in are not interested in these tiny shoebox condos. Realtors will tell you everything will work out if you plan to live there for 5 to 10 years. It's true. That's what they do say. Not that I believe it, but that's what they say. Many of them, not all of them. But I can see how this will not go up in value for 10 to 30 years. People do not want these units. And I think that could be what's happening in China right now. They don't want, oh, look at the comment actually here at China. China and other countries have done the same, and it doesn't work out too great in the end. So somebody knows what's going on in China there. And it's true, like nobody wants these units. And what's another thing I talked about with somebody this week was the problem with these units now is the builders and developers have already planned for many more of these units, right? And their development plans and whatever else. So it's going to take them years to change that inventory over. They're already targeting families now instead of investors. Like I don't see as much investment propaganda. Come here to invest in this neighborhood. Like I get the builder stuff, but they're now they know like investors aren't buying these, so now we have to start going back to families. But you know how long it's going to take? Like they have approvals on these developments and these towers, and they can't build them, 300-400 square foot units. So they're going to have to either let them go bankrupt and redo them. I don't know what's going to happen with the communities. Like in my area, they're just like empty lots and they can figure it out. But with condo towers that are like half built, I don't know what's going to happen. But yeah, it's true. Nobody wants these units. They want homes to live in, not places, shoeboxes to rent from investors that they have no choice because the investors drove up their prices and now people have no choice but to rent these units. But again, it will change. Thanks for that comment. All right, so this is the last one for today from Richard. In 1989, Canadian housing crash took 13 years until 2003 to break even. There was no depression, just a recession. It wouldn't surprise me if it takes 30 years to recover from a depression. So he's not saying that there's going to be a depression this time, but yeah, that wasn't a depression. It took 13 years, depending on where you lived, to recover from the 1989 prices. And this is not abnormal. I've looked at other places. I think Ireland was one. It took from 2007 to 2022, which is 15 years to reach those 2007 prices, and that wasn't a depression. In the States, it peaked around 2006, and it took many years to get back to those levels. I think the bottom was 2012 or something, but it took a long time. That's what people don't understand, and these are just recessions, so that's a great comment there. All right, thanks for staying to the end. As always, leave your comments down below, and I'll see you next Tuesday.